Good afternoon, everyone, and welcome to the changes to the Part 5, which is a joint session that we've teamed up with the Society of Chartered Surveyors and ourselves in the Housing Agency. And we're going to focus on the amendments to the Part 5 legislation under the Affordable Housing Act 2021. My name is Pat Fitzpatrick. I'm with the Housing Agency, and Part 5 is one of the things I'm responsible for in the Housing Agency. With us on the call is Aisling Heary and Catriona Lawler. We're also part of that Part 5 team, and we provide advice and support, particularly to local authorities and sometimes to developers and approved housing bodies. Today, I'm going to start off by providing an overview of the key changes to Part 5 legislation and look at some of the scenarios which may arise. We'll have a number of slides that we'll use, and those will be circulated afterwards, but it may be useful if you want to read them again. And then delighted to be joined also by Ian Galbraith, who is a registered valuer and a member of the Society of Chartered Surveyors and is currently head of commercial valuations with Sherry Fitzgerald. Ian is then going to discuss the Part 5 change more from an industry perspective and looking at the valuation process. So after those two short presentations, we'll have a Q&A session for attendees. So feel free to submit any questions you have via the WebEx, via the Q&A box below. We're using Zoom, not WebEx. So if you want to use, there's a Q&A box available at the bottom of the Zoom screen, and if you want to put your questions in there, Aisling and Catriona will keep an eye on them, and they'll alert us to those being there later. We are recording today's webinar, and we'll be circulating recording to everyone who registered for the event within the coming days. It'll also be made available on our website. So I want to thank the Society for Chartered Surveyors for arranging this joint webinar today. We hope you enjoy it, and we'll get started. So the first thing I'm going to do, as I said, is to go through some slides on the specific changes to Part 5. So hopefully on your screen at this stage, you can see that intro screen. Very quickly, just to give you a quick summary of what the Housing Agency is. The Housing Agency is it's an agency under the Department of Housing, and we work with and support local authorities, approved housing bodies, the department itself, and the private sector in the delivery of housing and housing services. We have a range of activities, and I think we do everything from assessing loan applications to local authorities all the way up to repairing pyrite in people's properties. So we've quite a range of people within the agency. The key discussion points today are the 20% Part 5 requirement. So the recent change and what that means, where it is in the legislation. There's transition arrangements, which have got quite a bit of attention. We're going to cover those. There are new options for delivering a Part 5. Well, one new option and the return of one existing one, and that's the affordable purchase and cost rental housing. And then there's a couple of additional amendments that we're just going to mention so that you're aware of, including exemption certificates and unzoned land. So the very first piece is the 20% Part 5 requirement. So just for clarity, we're dealing with Part 5 of the Planning and Development Acts 2000 to 2021. The Urban Regeneration and Housing Act 2015 was the act that made the change from 20% to 10%. So from 2000 to 2015, the requirement for Part 5 was 20% of the land. 2015, it changed to 10%, and the Affordable Housing Act has now put that back to 20%. There's been multiple changes to the Planning Acts over the years, and one of the useful services provided by the Law Reform Society is they have consolidated versions of all these acts. So if you're looking for one place, and they've already updated the Planning and Development Act with the latest amendments. I didn't mean to click on that particular link. So the Part 5 requirement changed to 20%. The change was made, as I said, by the Affordable Housing Act. Now, there's a couple of technical pieces here. Previously, local authorities specified in their housing strategy what the Part 5 percentage was. The legislation allowed them to specify up to 20%. And in most cases, they specified 20% as being the Part 5 requirement. And that's the Part 5 requirement that was then applied to planning permissions. There's been a change to the wording in section 96.3. Section 96.3 is the part of the Act that deals with imposing a Part 5 requirement on a planning as a condition of planning. And that change now means that Part 5 requirement is full 20% in all local authority areas. Regardless of what the housing strategy says the local authority needs in specific areas or across its area in terms of numbers or demand for social or affordable housing, the Part 5 requirement for every planning application granted is 20%, and it is subject to some transition arrangements. So if we deal first of all with, that's the text of the legislation, and it's referring to paragraphs B and paragraph J, and it's written in legislative language, but it specifically says an agreement under this section shall provide for the transfer of the ownership of 20% of the land. So Part 5 always dealt with a percentage of the land. And over time, I think the people had moved on to consider it as being 20% of the houses, but it's important for some slides later on. It's 20% of the land is what Part 5 applies to. 96.3b deals with the alternative options. So there's been no changes to the alternative options in 96.3b, nor has there been a change to the end of 96b. And what that basically means is if you do something other than the transfer of land, such as taking houses on site or off site or leasing, the local authority must achieve the same net monetary value as it would if it took 20% of the land. So that's comes down to the whole net monetary value piece, and Ian is going to talk a little bit more about the related issues in his part. So for our part, the net monetary value, the overall net monetary value of any site is the market value less its existing use value. So the market value of any site will increase once it has planning permission. So the net monetary value then is a measure of the betterment value or the planning gain that's achieved on that site due to the grant of planning permission. And Part 5 requires that the local authority captures 20% of that planning gain for the provision of social and affordable housing. The use of the term equivalent net monetary value only relates to the alternative options. So if you sell the local authority 20% of the land at existing use value, there is no net monetary value calculations. They've got 20% of the land, they've achieved what they need to under Part 5. If you're going down the other route, you need to work out, well, what is the net monetary value of 20% of the land? And am I getting the equivalent of that through any of the options that we have offered? So the way we look at it is the net monetary value has a number of meanings. If you put in a Part 5 offer to a local authority and say, I want to transfer you 10 houses, there is a net monetary value associated with the transfer of those houses. That amount is compared to the monetary value that they're supposed to achieve if they took the land. And that's your net monetary value should match your equivalent net monetary value. That's as much as we'll say on that, but it is an important concept for one of the later parts of the changes in the legislation. Most of the interpretation of Part 5, and it got a pretty good testing in 2006, 2007. So the judgment of Justice Clark at that stage was in relation to two Part 5 cases. It is an interesting read, and we'll definitely provide a link to a copy of that judgment for anyone who's interested. But the main points from our perspective was it established the entitlement of the local authority to get 20% of the land. There was an argument at the time that they should just take one house and offset all of the Part 5 value against that. It dealt with the number of units that an arbitrator would decide if there was a dispute arose between a developer and a local authority in relation to the number of units to be transferred. Again, the legislation doesn't say that you must transfer 20% of the units. It says the number of units as agreed between the parties. The costs and compensation piece as to what price should be paid, that's covered, was tested and gone through in detail by the judgment. And also this concept of balancing payments. So if you take a number of houses on site, you look at the net monetary value that delivers. If it doesn't achieve the equivalent net monetary value, or it overachieves the equivalent net monetary value, either the developer owes an additional amount of money as a discount, or the local authority needs to pay a little bit more over and above the costs agreed to reflect the over delivery. But the key point is 20% of the units on any development does not always represent the equivalent of 20% of the land. So that's a change to 20%. It is at 20% across the board. Now, there are the transition arrangements. So within the Act, I'm not going to read that out, but there are transition arrangements. The only bit I will highlight on this slide is the reference to the 1st of August and the 3rd of September. The legislation talks about permissions granted before the 1st of August, when in actual fact, the legislation wasn't commenced until the 3rd of September. So in that case, in both those cases where the 1st of August appears, the relevant date is actually the 3rd of September, because that's the date that the Act was technically commenced. Now, we've published a graphic in relation to this as to when the 10 and 20% applies. And that's available to be in the slides, but it's probably maybe an easier way, we hope, of understanding. So dealing with the grant of planning permission first on the left-hand side, planning permissions granted before the 3rd of September 2021 will continue to have a 10% Part 5 requirement. Planning permissions granted after the 31st of July 2026, all of those planning permissions will have a 20% Part 5 requirement, regardless of when the land was purchased, regardless of any other factor. From the 31st of July 2026, the Part 5 requirement is 20%. On the right-hand side, then, we're dealing with the bit in the middle. What happens between those dates? So this is where the date of the purchase of the land becomes important. Now, as we mentioned earlier, the Part 5 requirement changed from 20% to 10% on the 1st of September 2015. So from that date, people buying land expected a Part 5 requirement of 10%. And that persisted up to the 31st of July 2021. So for any new planning permission for housing where land was purchased and permission was granted after the 3rd of September, so land was purchased before the 1st of September 2015, and a permission is granted, they will have a 20% Part 5 requirement. For land purchased between the 1st of September 2015 and the 31st of July 2021, any new planning permission will have a 10% Part 5 requirement, provided the applicant for permission can show that that's when they purchased the land. That would be the key proviso in that section. And from the 31st of July 2021, for land purchased on or after the 1st of August 2021, any new planning permission will have a 20% Part 5 requirement. So the 10% Part 5 requirement applies only to land purchased between the 1st of September 2015 and the 31st of July 2021, but you must get your planning permission before the end of July 2026, at which point all permissions will have a 20% Part 5 requirement. Again, I just emphasize, in relation to land that was purchased, the onus between the relevant dates, the onus is going to be on the applicant to demonstrate to the local authority that they had purchased that land between those dates. Now, there's a couple of transition arrangements transition scenarios that we've already had some questions on. One was in relation to an application for planning permission with the consent of the landowner. So a developer applies for permission, they don't own the land. So if they apply for permission and they purchase land between the 1st of September 2015 and the 31st of July 2021, the local authority receives a planning application from somebody else for a development on that land. And they have a letter saying, yes, I bought it between these dates and I give consent to this developer to apply for permission on my land. That land is going to be sold to the developer. The assumption is that land is going to be sold to the developer on grant of planning permission. So they're not the owner of the site, so they will not be entitled to seek the 10% Part 5 requirement in that case. The second scenario is the sale of a site with planning permission. So again, an individual or company purchased the land between the relevant dates where the 10% applies. They apply for planning permission, which was granted in October 2021, and it has a Part 5 requirement on the basis of when it was purchased. The land is then sold after it achieves planning permission. That planning permission and that land is still eligible for the 10% Part 5 requirement. So the Part 5 agreement for that planning permission will be for 10%. A third scenario is the amendment to an existing planning permission. So again, the land was purchased on the relevant dates. The permission is granted with a 10% Part 5 requirement. Subsequently, an amendment to the planning permission is sought. Now, the amendment to planning permission is actually a convention that has developed over the years in planning, whereby minor changes to permissions granted are dealt with as a planning application and a grant of planning permission by the local authority, but they're always dealt with as an amendment to the original planning permission. So the terms and conditions of the original planning permission apply, and they just have a number of amendments bolted onto it. So in that case, the planning permission retains the 10% Part 5 requirement. Now, it's up to the local authority planners to decide, is an application for permission just for some minor amendments, or should it be treated as an application, as for a new application for planning permission? If it's a new application for planning permission, it will have the 20% Part 5 requirement. So in those cases, it really comes down, and you probably really need to engage with your local authority planners to see the amendments I'm proposing, are they an amendment and will they be dealt with in the convention that's been practiced over the years, or should I be looking at this as a new planning application? The last scenario that we were asked about recently actually was in relation to site assembly with different land purchase dates. And again, it's fairly clear. So in this scenario, if a planning application is received and the site, 70% of it was purchased in August 2020, and the remainder of the site was purchased in August 2021, the Part 5 requirement is actually split across those two parts of the site. So there will be a 10% Part 5 requirement on the piece that was purchased in August 2020, and there will be 20% for the portion purchased in August 2021. And from that, the local authority can work out what it needs, and the developer for that matter, what they need to achieve in terms of the equivalent net monetary value. If the agreement is for the transfer of land in that case, there's no distinction between having to transfer some land from the 70% of the site and other land from the 30%. Once the net monetary value is agreed, it applies to the whole site. Just move quickly on then to talk about affordable purchase and cost rental. The Affordable Housing Act also introduces a new form of housing, which would refer to as cost rental, but it's looking for Part 5 to potentially deliver some affordable sale properties and cost rental properties. And that's dealt with in this section 96(3)BB, again, which is another reason why we're sending you a copy of the slides. You'll have these references to the Act. But there is a restriction in the Act that says on land where the 20% Part 5 requirement applies, at least half of the land or equivalent net, or half of the equivalent net monetary value obtained under Part 5 must be used for social housing support. So if the deal is for land, 10% of it must be used for social housing support. And if you're going down the route of applying the equivalent net monetary value across a number of houses, half of the equivalent net monetary value must be applied for social housing support. The remainder on those sites can be used by the local authority to provide discounted housing for sale, so for affordable purchase, or for cost rental housing, which means the properties will be retained in the ownership of either the local authority or more than likely an approved housing body, and they'll be rented out as market rental properties, but at sub-market rent rates. On land where the 10% Part 5 requirement applies, all of the land or the equivalent net monetary value must be used for social housing support. So again, this is something that both yourselves and local authorities are going to have as part of negotiations on an ongoing basis for your Part 5 agreements. What's the local authority's plans for affordable housing? How many houses are going to be used for affordable housing? What houses are suitable or not suitable for affordable housing? And again, from a local authority's perspective, they need to consider what price constitutes affordable. For sites where the equivalent net monetary value is very low, so for example, the existing use value and the market value, there's not a huge amount of difference between them, that's the key source of discount on the price that the local authority would be using in order to sell the property at below market value. So if they can't achieve the values or the prices that they're looking to achieve, they'll have to consider either potentially taking all of the houses for social, because ultimately it's going to be the local authority's risk to get these properties sold for affordable. Local authorities will be taking out loans to buy in these properties. So they need to figure out what housing is suitable in a particular area. They also need to discuss, and directly with yourselves, the developers, what's the sales process? And it's more than likely going to be some form of direct sales process, because the best people to sell houses are the people that are building them and already have the marketing set up in place. So if the local authority is selling these to affordable purchasers, they'll be looking to enter into some form of direct sales process. Now, there's lots more information to come on that in the affordable housing regulations that are due out later on this year. But it's important to mention those at this point. Again, on cost rental housing, the cost rental housing is slightly different in that it's not going to be sold on to individuals. It's going to be retained by either the local authority or an approved housing body. And it probably works best in a development that's going to have a significant cost rental provision outside of Part 5 anyway. So most of you will be familiar with approved housing bodies purchasing phases of developments, or indeed, full developments in some cases, where the Part 5 element is dealt with the local authority, and the AHB gets the benefit of that. The AHB can also purchase the properties that are going to be used for cost rental. So in an instance like that, the AHB would be buying just all of the units from you at the price that's been agreed with the local authority, and all of the other units at market price. Again, local authorities and AHBs in that instance needs to consider the demand, financial and operational cost factors to see what rents they need to charge, and is that sub-market rent, will there be a market? Otherwise, they have this vacancy risk of buying a house and there's just nobody, they can't possibly leave it empty. Moving on then to the final part, just some additional amendments, and we're nearly there at this stage. Some of the technical amendments that were made in the legislation, applicants for permission can now apply for exemption certificates. So before you apply for planning permission, you could always apply for an exemption certificate. Up to 2015, for 4 or fewer houses, you could apply for an exemption certificate. That went up to 9 or fewer when the requirement was reduced to 10%. It's now back to 4 or fewer houses. So if you're doing a development of 4 or fewer houses, you can apply for an exemption certificate. As I said earlier, Part 5 applies to all residential developments. So no matter what residential development you're doing, if you don't want Part 5 to be applied, you'll need to apply for an exemption certificate. Exemption certificates that was granted before the 3rd of September this year, the date that the legislation commenced, those exemption certificates are still valid. Just because it was changed for 10 or 20% doesn't change the validity of the ones that have already been granted for particular developments. The zoning piece is important. Just to re-emphasize that Part 5 applies to any residential development, whether it's on zoned land, mixed zoned, or unzoned land. The 20% Part 5 requirement applies in all cases. Prior to the recent changes commenced, Part 5 only applied to developments on zoned land. So that again is a significant change for those of you involved in areas of the country that have development plans that don't actually zone specifically residential, maybe just urban areas. There are a number of counties that do that. So if you're building in those towns, Part 5 very definitely applies. And the last couple of amendments worth mentioning, the market value of land for the purpose of Part 5, it's now defined in the Act as the open market value on the date of the grant of planning permission. Approved housing bodies can be nominated by local authority to lease Part 5 homes directly from the developer. That was an amendment that was made to the existing arrangement whereby many local authorities would like AHBs to take on the leased Part 5 homes, but they weren't permitted as the legislation stood. So that's now been amended. Part 5 won't apply to planning applications for housing developments by approved housing bodies, which are to be used for cost rental. Again, it's recognized cost rental as one of the legitimate uses of the Part 5 planning gain. and the legislation has been updated to bring clarity to the availability of arbitration at any stage of the Part 5 negotiations. As it stands, it refers to an 8-week period. That's now been removed. So if there's a dispute between parties, you can refer it for negotiations or for arbitration. Okay, so I'm going to stop sharing at this stage, and I'm going to hand over to Ian to give us his views on this and to share with him some of his experience on the valuation process. Ian, are you with us?
Hi, Pat. I am. Thank you. Just trying to sort out one or two things here with the screen sharing. You might confirm if that's true.
Yeah. You can see that.
Thanks very much, Pat, and thanks for handing over. Thank you, everyone. So today I'm going to have a chat around the Part 5 valuation process and some of the impacts that Pat's been talking about in terms of the moving from 10% to 20% on specific sites, but also more so around the impact of the NMV, how that's calculated, and some of the thought processes around it. As a way of introduction, my name is Ian Galbraith. I'm a chartered valuation surveyor. I'm head of commercial valuations with Cherry Fitzgerald, and I'm an SCSI APC assessor. Yeah. So moving on to the next slide. Before I get into too much, I'm going to give a quick background on what the SSI is and who they act for, and the SSI, they're an independent professional body who provide advice on key issues for business, society, and government. At present, there are approximately 4,000 members nationwide, with 12 professional groups or disciplines within the SCSI. So as part of my presentation today, I'm going to go through sort of Part 5, what some of the definitions are, and what's covered. On this slide and the next, I've outlined the definitions of existing use value, open market value, net monetary value, and the equivalent net monetary value. The existing use value is the value of the land calculated by reference to the date the planning permission was granted, on the basis that it would have been unlawful to carry out any development on that land other than exempted development. It's also important that existing use value should also have regard to any existing buildings on the land. The open market value, the OMV, is the value of the land or property with planning permission for residential development attached to it. In negotiations, is often referred to as the development value. The net monetary value, or NMV, is the uplift on the existing use value of the land due to the grant of planning permission for residential development. Part 5 enables the local authority to capture a portion of this uplift. And then the equivalent net monetary value is the amount of net monetary value to be achieved through the delivery of Part 5 options other than land. For example, if the local authority purchases a sufficient amount of houses within a development to equate to 20% of all housing plots, equivalent net monetary value may have been achieved, and therefore no NMV balancing repayment is required. Again, this will have to be looked at on a case-by-case basis. So in terms of the role of the valuer, there are 5 stages in the Part 5 process. Stages 1 and 2 are the planning are the pre-planning and planning application stages. At the pre-planning stage, it's important to provide advice around the Part 5 requirements on the land. And some of the options to consider are, is it going to be a transfer of residential units, a transfer of land, a transfer of alternative units or land to the local authority, or lease of units within the development to the local authority. The next stage then is the planning application stage, and the applicant is advised to provide the existing use value of the land at this point. If the open market value is provided, this is subject to adjustment once the final permission on the land is granted. At these stages, it's important to ascertain the existing use value and the open market value in draft, as these will play an important role in negotiating the amount and type of units to be transferred to the council. If the applicant decides to transfer units, then the council and applicant will have to ensure that the correct amount of units has been transferred and that any balancing payment to the council or applicant are considered. This can relate to specific cases where there are an uneven number of units, say 43 houses within a new development, and assuming 20% Part 5 applies, this results in approximately 8.3 houses being transferred. Therefore, the applicant may decide to transfer 8 units and pay the ENMV to the council. This is generally done by the developer providing a discount on the construction costs charged to the local authority, or alternatively, the developer provides 9 units to the council, then the balancing payment should be made by the local authority to the developer in addition to the building costs. Where units are leased to the council, the net monetary value must be given to the council in the form of a discount from the normal market rent over the period of the lease. Now, it's important to note that the discount is in addition to the normal discount usually obtained by the local authority. So stage 3 is the planning granted with Part 5 conditions attached. The applicant should provide final existing use value and open market values to the planning authority at this stage. Date of the valuation is the date of the granted permission. The open market value should reflect the value of the land having regard to the granted planning permission in place, and the council will use the existing use value and open market value to calculate the net monetary value. It's important to note that where draft open market value has been provided on the basis of a proposed development and the granted permission reduces the number of units, then the final OMV should be amended to reflect this. Stages 4 and 5, if an agreement can't be reached between the council and the applicant on the existing use value or the open market value, then an arbitrator can be appointed to determine the value. Once the agreement on the existing use value and the open market values are reached between the council and the applicant, the figures are reported to the council's Part 5 or housing section and form part of the overall Part 5 agreement. The Part 5 agreement is then signed by all parties and finalised. So getting towards the end now, but we'll go into a little bit of detail here now around the calculation of the NMV. So the existing use value and the open market value of the property are the most important parts of the process to get right, as these values have a direct impact on the net monetary value, and it's important for both the applicant and the council to ensure these values are correct. When establishing the existing use value of the land, if the land is a greenfield site, it's important to note that the current zoning of the land, any hope value for development or any alternative use that would require planning permission should be disregarded in arriving at the existing use value. Where the land was previously an alternative use, for example, there are existing buildings on the land, then these buildings should be valued having regard to their existing use, disregarding any premium a purchaser would pay to reflect the development potential of the buildings. As mentioned previously, if there are any buildings on site, the applicant should notify the council prior to any demolition works being commenced so that a fair assessment of existing use value can be made by the council. In general, the existing use value is calculated having regard to comparable evidence. When analysing this evidence, it's important to identify if any premiums be paid for the comparable properties to reflect an element of hope value. When analysing comparables, it's also important to have regard to the location, configuration of the site, the topography of the site, the profile and the lot size of the land, in addition to any value a purchaser may pay to acquire the land, as long as any such amenity value does not require planning permission. When calculating the open market value, the main methods of valuation are the comparable and residual methods. The residual method of valuation should be the primary method, as this has regard to the specific attributes of the site and the planning permission in place. The key inputs into residual valuation include the gross and net development values, which are the value of the completed development. From this, we then take away costs, construction costs, professional fees, development levies, sales and legal fees, and a developer's profit, in addition to allowing for construction timelines and cost of finance. This then produces a residual amount, which is the market value of the land. This can then be cross-checked using the comparable method evaluation. When using this method evaluation, it's important to have regard to the location, lot size, density of the planning permission in place, and analyze how this compares to the subject property or property being valued. It's important to note that the comparable method should have regard to the specific attributes of the land being valued, and a premium discount should be applied once these considerations are properly analysed. The comparable method evaluation is most commonly used. However, some of the key issues around this method of evaluation are the limited number of transactions, especially in regional locations, and then trying to analyse the relevance these comparables have to the property being valued. Things to consider include if the comparable sale has planning permission in place, and if so, should the site be analysed on a rate per acre or a rate per unit basis? Is the sale current or historic, and are there any specific characteristics of the site that would impact the value? Once this is analysed, the comparable method should be cross-checked against the residual method, and if there is a variance in values, further review of the comparable sales and or the residual inputs may be required to arrive at the open market value. Once the open market value and existing use value are agreed, the net monetary value equates between 10 and 20% of the difference between existing use value and the open market value, depending on when the site was acquired. So in conclusion, it's important that both the council and applicant establish existing use value and open market value with as much accuracy and reliability as possible. The method evaluation should be considered carefully, and regard should be had to both the residual and comparable method evaluation. The net monetary value is a key part of the negotiation process on the number of units, the type and the size of units to be transferred to the local authority, or discounted market rent to be applied when leasing units. Finally, I've attached a link to the SSI Part 5 guidance note, which some of you might find beneficial. So thank you for taking the time, and I will hand you back to Pat.
Thanks for that, Ian. And we do have a number of questions in the question and answer box. And what I'll do is we'll just go through those fairly quickly. I think some of them are straightforward. Others we may be just giving an opinion on. The first one is the transitional arrangement. What does the date of land purchase mean? Is it the date of the contract or the date the sale closes? Now, we did have a couple of questions on this, and when we went to look in the Act itself, there is a section that dealt previously with land purchase dates, and that's section 96.6, and it talked specifically about land purchase by the applicant before a specific date. And then it goes on to say, or land purchased by the applicant pursuant to a legally enforceable agreement entered into before that date. So the first part seems very clear that the sale is completely closed, that the ownership is transferred. The second part talks about contracts for sale. So the new amendment only talks about land purchase, which to our understanding means the sale has been completed. So if it's still in legally enforceable contracts for sale, as far as we're aware, and again, this will need to be probably either tested or checked, but from the legislative perspective, it says the land purchased, and there is already another part of the Act that separates land purchased and legally enforceable agreements. So I think for now, you'd have to take it that the sale has been completed. The next bit is related to, the next question is to do with the housing strategies and what is the standing of the sections of Part 5 that allow a local authority to set different and a low or no requirement if justified. So these elements of the Act still remain because they relate to what a local authority has to do when it's a housing strategy. In its housing strategy, a local authority has to do an estimate of need for housing of different types in its area. So that housing strategy is still required to estimate the level of need for social and affordable and cost rental housing in its area. So that sets its strategy for what it wants to deliver. but it no longer defines what can be taken in terms of a Part 5 agreement. So it will be more in terms of the general area that they need a percentage of the housing. When it comes to individual planning permissions, they'll be looking at the demand in an area and use that to determine, or part of the rationale to determine how much of the 20% of Part 5 can be used for each of the various elements. For areas where there is no Part 5 requirement, the planning gain on the land still needs to be captured. So if there's a very low requirement, for example, where you just needed to take one social house, well, you can wrap all of the equivalent net monetary value up into that one house. So even though it might be development of 100 units and you're entitled to 10, you could purchase the one house and agree that all of the discount would go into that particular property, assuming that all of that discount didn't leave with an additional overhang. Obviously, if the property came for free and there was still a debt, well, that might cause an issue. But there's also offsite options. So in areas where there is no demand, the offsite can be delivered in other areas from that development. The next question is kind of related to that question, and it's related to if the council cannot fulfill 10% for affordable. And I'm assuming that means, I'm not sure where the question is coming from, but I'm assuming if they agree to take 10% affordable and they can't actually sell the 10% affordable, well, the local authority is going to have to do something with it because they're obliged to buy it. So the most likely option is they will continue to buy it and they'll have to use it for social housing support, assuming that they don't have an over concentration in a particular development, which is the reason why they were limited to 10% in the first place. But the council separately, as part of agreements, can decide, look, we take anything up to 20% of the number of houses. And I know there is a question later on the number of houses, and which we can answer. But yes, there is that flexibility, but obviously, you know, there's going to be discussions that after the planning permission is granted, the local authority will have in its head what it would like to do at that stage, but it should have a reasonable idea if there is a market for affordable housing, and it's only when it sees the costs of that housing will it be able to determine if it's available for, you know, if it's suitable for affordable housing. The eligibility criteria for affordable home purchase, that's due. It's due before the end of the year, we're told. But again, that will depend on somebody actually completing the writing of that set of regulations and getting it through the whole system and having them published in time. There are local authority developments already coming up to the point of sale, which are already screaming out for those regulations. So there is some pressure on those. Maybe Ian, if you're there, just looking at that question, are the costs of affordable housing units being provided on site to be agreed in the same way as the current Part 5 costs? I think the answer is yes, but I don't think there's any other answer. If you'd like to comment on it.
Yeah, Pat, that would be my understanding as well. There's no guidance yet to suggest that there's any change in the approach.
Yeah, and the next one, Ian, is if after the grant of permission, Irish Water charge a significant sum for the service connection, how is this to be treated vis-a-vis the net monetary value? Maybe you could comment on that.
Yeah, it is a difficult one, but it does come into the construction costs, and in theory the council are I suppose liable to pay for the development costs or construction costs. It is only the difference between the existing use value and the existing use value and the open market value. So again, if construction costs are higher and the builder is building right, it comes down to negotiation, but those costs should be passed on to the council, in my opinion.
Okay, so that's the other part of it. It's not part of the equivalent net monetary value calculations. It's just the construction cost that the local authority pays. So it's factored in as their share of the development cost, effectively.
That'd be my thoughts on it, yeah.
Okay, thanks for that. Moving on, is there a standard approach to the provision of units on site? Is it a percentage of the number of units or a percentage of the floor area? The Justice Clark judgment that I referred to earlier on actually was very definitive on the approach to what you'd achieve. And it's actually neither of the two things. It's not a percentage of the number of units or a percentage of the floor area. It's you need to get the equivalent of the percentage of land. For houses, it's very simple. If you can pick 6 houses, when you take they're plots, so that they're the house that it sits, the plot that it sits on in its garden. When you add that together, if that adds up to 20% of the plots on the whole site, well, that's equivalent to 20% of the land. If not, you're into balancing payment. And again, Justice Clark was very specific about floor area. When it comes to apartment blocks, you can't equate an apartment to a piece of ground just by saying, because it doesn't sit on a piece of ground in most cases. So it's only in that instance that you would use the floor area as a second layer of apportioning the site area. So you have an overall site area at the start. If you're just building houses, you'd apportion your site area to the plot areas. So if you had a very large plot under one house and much smaller houses on the plots under the other, there would be a difference. Taking 10 of the houses wouldn't necessarily give you 10% for a 100-unit development. So you're apportioning the site to plot areas. So when it comes to apartments, you're furthering apportioning that plot just for the entire apartment block based on the floor areas of the apartments. There is guidance out there, and there's statutory guidance that shows examples of how that works, and that's what local authorities are looking at when they're doing the calculations. And that guidance, it is statutory guidance published, so it is available. And certainly, if anyone's difficulty getting it, let us know, and we can send you a copy. The next question I'm looking at is, because questions are disappearing, what happens where the affordable value is less than the cost of a particular unit? I'm not entirely sure what that question means, and if the person that answered it might want to clarify, but I'm assuming is that's the price agreed for sale is less than the cost to the developer of delivering the unit. I can't see how that might arise. So if somebody wants to clarify what they meant by that question, please do. The property arbitrator is an interesting one. We did have a session with a property arbitrator a couple of weeks back, and I don't think, Katrina, if you were there, I don't think we dealt with the costs. Maybe Ian or Katrina, you know whether the costs are split between both parties. I think normally in arbitration, that's the way it works.
We didn't actually ask the arbitrator specifically, but we can find out.
Okay, it's just interesting to know. The next question, Ian, appears to be for you. Under the disputes section, Ian stated that the property arbitrator deals with any Part 5 disputes. My understanding is the arbitrator can only deal with value and numbers, and that everything else is dealt with by An Bord Pleanála. That's, sorry, Ian, yeah, go ahead.
No, sorry, but you were going to say something there?
No, I was going to say that's my understanding as well, that the arbitrator only deals with value and numbers. And maybe that's where you've been interacting with the arbitrator, that An Bord Pleanála deals with disputes on the option to comply with Part 5 and any other issues that arise.
Yeah, no, sorry, that's right, Pat. Yeah, it was a misunderstanding.
So if the land being offered for Part 5, if the lands are offered are serviced, can the value of these services be considered and compensated in the overall cost paid to the developer? So this depends on when the servicing was done. Service sites were an option under the original Part 5, but now it's just dealing with land, and it's assuming it's the land as the developer is the state it was in when the planning permission was submitted. If there was significant servicing of that land prior to the submission of the planning application, I'm not sure, and I'll ask Ian to comment on that, how that would factor into the existing use side. If it's to be serviced afterwards as part of the development, well, then there'd have to be some agreement between the local authority and the developer as to how that services get paid for. But because the deal was for land, like presumably the local authority will service its own land if it takes a portion of the site. That can get complicated where they pick different parts of the site where you effectively get services by default, and that would have to be by negotiation of the Part 5 agreement. Ian, do you have any insights on that one?
No, not specifically in a situation like that, Pat, to be honest with you.
Okay, no, that's fair enough. There's a question on residual valuations, which Ian had mentioned, and it's where we've seen the council rejecting residual valuations in previous negotiations. There is actually a case, as far as we're aware, referred to the property arbitrator on the valuations side on that specific point. Until we've seen the outcome, that'll give us a pretty clear answer on it. But generally, Ian was talking about, and again, Ian, you might comment, they were talking about comparing the residual valuation with comparable market values. Is there a massive difference in all cases, Ian?
It can make a significant difference in some instance, Pat, yeah, where it really does come down to, I suppose, the specific attributes of the site itself. In a lot of instances, yeah, the council or local authority don't really look at the residual method, and they do look at comparables only. But I think it's more so a case of the comparable method is difficult to solely rely upon, and residual method should really be looked at as well, and it's something that should probably become a little bit more commonplace in my own opinion.
Okay. Looking at the approach to can you confirm the approach to the affordable valuation report approach? Again, I'm not sure if you're just talking about working out what price is paid for the property that's being used as affordable housing. It's the same as it's the same cost calculation under Part 5 as it is for whatever other houses the local authorities are buying, whether it's for cost rental or social housing. If there's a further aspect to that question, if you're talking about the market valuation later on, you might let us know. The next question is, what is an affordable property? That's a very interesting point. The affordable properties as defined under the Affordable Housing Act is just talking about houses that are sold where there's an equity stake taken by the local authority between the amount that the purchaser buys and the market value of the property. It doesn't necessarily get into the classification of to what cohort it's affordable to. So you're not down at the level yet within the legislation of defining that an affordable property must be sold at a specific price and trying to get everything to work towards that price. This is about selling properties in an area at below the market price in the area. And then it's sold to people who couldn't afford the market price in the area, but at a price that they can afford to purchase at. The next one is it's a good point, is a clarification. Part 5 is based on the net market values, which we assume are the market value less the existing use value. But exemptions are based on the number of units. That's correct. If you're looking for an exemption certificate, there's an exemption based on the number of units, but also on the site area. So if you're building less than 4 or less houses, or if you're building on an area less than 0.1 hectares, you can apply for an exemption certificate. But Part 5 deals with, once you're into Part 5, you deal with the percentage of land. It's 20% of the land that's relevant. And I'd see there's lots more questions still coming in, and we're coming up towards the end of our session. What we'll do is I think we will just aim to answer 1 or 2 more as we go down through them, but we'll copy the questions out and we'll circulate a list of responses to the questions subsequently. And if there's any queries or any other follow-up questions, by all means, you can contact us. You'll have our contact details on that circulation. How these updates expected to reflect within the HNDA model in preparation of housing strategies. Katrina, I think you've done some work on the HNDA models and the housing strategies. Could you maybe answer that question?
Yeah, so I'll just come on camera. Hello, everybody. The HNDA models, some local authorities were given an exemption that they didn't have to use the HNDA models in the preparation of their housing strategy if those housing strategies were already in train when they were introduced in April. But there should be enough, the department's view is that everybody's housing strategy should have enough information contained within the housing strategy, if you use the HNDA model or anything like it, to calculate the Part 5 requirement. So the HNDA should set out the amount of social housing, the amount of affordable housing, and the affordability challenges faced in each local authority area. So based on those figures, you should be able to calculate the Part 5 requirement. If you have any specific questions on that, I'll be circulating the slides and the recording, so you can just reply to that email and I can answer any specific questions.
Okay, and I think we have time for one or two more. Can you further explain the meaning of existing use value with an example? And I think you've actually given the example: agricultural land that is already zoned for residential development. The zoning is ignored in the calculation. It's the zoning is effectively saying what it could be used for if it gets planning permission, but it can't be used for that until it actually gets planning permission. So it's not until the planning permission is granted that the value for the purposes of Part 5 is attributed to it. Ian, if there's any, if you have any different view on that, please let us know.
Yeah, no, Pat, totally agree with you that one as well. Yeah, it's that's my understanding.
Okay, there's a question on when the council-led affordable housing scheme will go live. Like I said earlier, there are two schemes already under construction with local authorities, which had started before the Affordable Housing Act, one in Fingal, one in Cork. And the councils are planning further schemes for development, but I couldn't tell you when they'll go live. There will be advertisements over the coming year and over the coming years, hopefully, for affordable housing in lots of local authority areas. Yeah, that's an EV one. If the 20% encompasses 10% social and 10% cost rental, is the Part 5 discount evenly spread across both social and cost rental homes? Again, the minimum of 10% has to be applied to the social housing element of it, and they may go higher than the 10% in apportioning the net monetary value, depending on the demand for affordable or cost rental units in the area. At this stage, it's just coming up to 4 o'clock. So I know other people have commitments at this time. So as I said, we will copy all of the rest of the questions. We will provide maybe an FAQ type answer to that over the coming week, and we'll circulate it to everybody who attended. But for now, I want to thank Ian for coming along today and thank everybody else for attending. And best of luck.
Thanks, Pat.